Good evening, everyone. It is wonderful to see you today. It is a wondrous day up here in New Jersey. 72 degrees. Was outside playing soccer with my little one. My middle one climbing a tree. My big one writing his comic book. Right, Dan?
Yes.
Then he came outside and he hung out with us too. Got in a little kettlebell workout. But the soccer game, believe me, with me and my little one, who beat me 2 games to nothing, games to 11, you got to win by 2, was enough to work up a sweat. All right, this week, big week. Let's talk about it. Monday, Draghi speaks at 6 o'clock in the morning. Tuesday, CPI, core CPI, those are pre-market. Wednesday, French and German flash manufacturing, and then building permits at 8:30, capacity utilization, industrial production, and that's it on Wednesday. Oh, no. You tried a funny, Tiny. It is the FOMC announcement. Probably, Paul could disagree with this, but probably the most anticipated FOMC announcement in years, right? Maybe even a decade at this point. Rates will be raised. Paul, what is your opinion on that? Will they do the rate hike on Wednesday? Thursday, Philly Fed unemployment claims at 8:30. And Friday.
Yeah, I think rates are going to go up a quarter point. I don't agree, but I think they're going to go up a quarter point.
We know you don't agree. We know you don't agree that they should be raising rates here. And I know you'll talk more about that as to why. But I know you're a big opponent, of them raising rates right here. As far as the market is concerned, and this is where Paul and I may disagree on this, but I think new highs on the year from here, remember we already hit them in May, and the NASDAQ hit them, whatever it is, a week ago, or a week and a half, or whatever it was, whatever it was. I think new highs from here are out of the question for the rest of the end of the year, at least. And I think the big question is whether we close green or not on the year. And obviously, I'm talking about the S&P. We can get into the individual indexes also, but talking about the broad market using the S&P 500. I don't know. Do you agree with that, Paul, that new highs are out or new highs still have a chance? It's only 6% from here. Okay. I don't know. He's not talking, so. It's about a 6% move from here, but I don't think that we get there. I think that we are due a bounce this week. I think that we do have the Fed announcement coming up, but I don't know. Don't think that we're going to hit those highs by the end of this year. But maybe Paul disagrees with me. Maybe Paul thinks this is nothing and this is a buying opportunity, and it may very well be. Right now, I think that the move away from this consolidation pattern is something to not just ignore. This could be an ABC down, in which case we have to turn like right away. But if not, if we're going to continue to correct, we do have support coming up just under 200 at 199.29. So with that being said, I'm going to hand over to Paul. Paul's going to go into more detail on the indices and what he thinks. We still have 3 weeks, give or take a couple of days for holidays to do something. 6% from here is really only 2% a week. But, like I said this in the mastermind that we just held, but unless we get back in this range and then have this kind of gap on the other side, I don't think it's the real big question now whether we're taking out the highs or not. I think getting green on the year is still going to be the number one priority here. All right. With that being said, here's Paul. Jason says, huge insider trading this week from Icon. and several CEOs, energy companies, e.g. LNG, do you think there's a signal that energy is bottoming? I don't think that alone is the reason that it's bottoming. I do think that oil has lower prices to be seen. I think it sees the '09 lows at a minimum here. And then we went over a lot of levels in the mastermind of where I think this could go. I've been calling oil to the 20s since it was in the 70s or whatever it was, the 60s at least. Nobody believed me then. Now everybody's, the problem is now everybody's piling on, so now maybe it doesn't get there. But, my opinion, momentum favors more downside. But once the '09 lows are hit, it could be a climax. It could be a spot where profit taking comes in. It could be a spot for short covering. That's my opinion. But no, just because the CEOs and the energy companies and all that are buying them up, yeah, I don't see that as a signal in and of itself. Okay, here's Paul.
Okay, here we go.
Paul, text me when you're done, and don't forget to mail your piece, please.
Oh, I totally forgot. Okay, so big week last week, big week this week. Futures pre-market, what a shock, are absolutely flat, so there's no clues there. Not that they've given a great clue anyway. Let's see. Okay. So obviously the big event this week is the Fed on Wednesday. And I would say there's a 80% likelihood that they raise rates. I guess the only caveat would be is if the market really, really started unraveling Monday, Tuesday into the meeting, and that would be interesting. It would force their hand. As I've said many times, I really don't care what the news is. I care how the markets react to it. So I said this for the last couple of weeks. If we sell off into the Fed meeting, I'll be looking for a rally on the other side of the Fed meeting. If we rally into the Fed meeting, I'll be looking for a sell-off on the other side of the Fed meeting. So right now, we've clearly sold off into the Fed meeting. And so I'll be looking for a rally on the other side of the Fed meeting. It would be incredibly bearish to see stocks sell off into the Fed meeting and then accelerate to the downside on the Fed announcement. That would not be good if you're a bull. If you're a bear, you'd really enjoy that. But it looks like to me that the trend will be down into the Fed meeting, whether we bottom tomorrow or Tuesday or Wednesday. And then the other thing is, for those who did our market timing class, we have the seasonality bottom on our radar screen, which starts with the window opens up tomorrow. So you've got the Fed and you have the seasonality trade that's literally right in front of us. So bulls certainly have enough ammunition to put up a stand and try to bottom for the Santa Claus rally. I think Tiny was talking about getting green on the year, which, as we all know, it's a year ending in 5, and it's the president's third year. Although it would have been more bullish if it was his first year of his first term than the second term. See, years ending in 5, 1995, 1975, 1955, or 1935 were all huge years to the upside. So this was the year, every other year ending in 5 was supposed to be the real double whammy bullish thing. The only downside was that it was Obama's second term and not his first. So if we don't get green, you will have taken one of the shooting fish in a barrel seasonal trends and had it fail for the first time. But I consider it a failure anyway because we're not up more. The market, according to that trend, should have been up a whole lot more. Should be up in the first place, but up big. Second, I always find, so Friday sell off, let's take a look really quick, then I can make my annoying, obnoxious comment. Right, could you not do that?
I'm trying to cut off the thing here. I can do it in my eraser thing.
Okay, thanks, buddy. So Friday, Dow was down 300, S&P was down 40, NAS was down 111. The only time I hear from the bears via email is when we have like a bad week or a really bad down day. And then I get all kinds of emails like, I told you so. I told you we were going down. We're in the bear market. We're going to go down 30% from here. I told you. And then when stocks, this happened in August. Like the bears came out of the woodwork the day of the crash. I told you this is going to happen. I told you. And then I said, well, looks like we're going to have a bottom and rally. No. The bear market's here. We're going down big. So Friday I got a bunch of emails. I told you we're going this is big. I mean, let's call a spade, guys. We're not even down 10% from the high. The Dow is down 1.76%. In normal non-ZIRP times, in non-zero interest rate times, this would be a normal every other week decline. So, oops. Do I think this was some kind of cataclysmic decline? I don't. I said last week that coming into this coming week, last Friday's rally was so pathetic beneath the surface. I said it and I wrote it in my blog that the market should pull back a little bit more. So did I expect the Dow to be down 300 Friday? No, I didn't. But I did think it would be down, and I did some selling on Thursday. And I do think the market's going to bottom this week. So if the markets do bottom, we'll see how they bottom and what kind of quality of the rally we had. But I thought it was a really, really interesting week, and let's start to dive in and talk about it. Let's see. Okay, let me just move one thing over. I am nursing something wrong with my ankle. My daughter had a softball lesson, pitching lesson today, and beamed me with a 52-mile-an-hour fastball that the bottom dropped out of it right into my ankle. And that really, really, it's the first time I fell on the floor rolling around. That hurt. So my ankle's up, my foot's up in the air, and I've iced it. But that hurt. And she smiles because I can't catch the ball sometimes. But oh well, I guess I'm getting older and grayer and fatter. All right, so this looks good. Let's start with the Dow. Here we go. So, Friday's action, did it do anything, horrific just on a chart? Not really. Are any divergences up here? No divergences. This is one setup from the market timing class that when you transition into a bear market, this setup always happens. I don't think it's ever failed. But this setup also happens about a million other times. It's kind of like the Hindenburg syndrome. For those of you who, again, were in the market timing class, the Hindenburg syndrome has always been present before bear markets, but it's been present a million other times as well. So anything big from Friday? Not really. I would not be surprised if market comes down, breaches the November lows intraday, maybe for a day, and then reverses and begins to rally. That will not surprise me. And in fact, one of my strategies probably will be to buy any breach of the November low. Here's the S&P. And as you can see, the S&P just ticked below the November low on Friday. I wouldn't be surprised if we had some more selling and then a quick reversal higher. The mid caps, which I did not own this week, thankfully, a little weaker, but the hump, the camel hump here, the mid cap saw their higher high recently, where the S&P and the Dow saw a lower high here, a point of interest. The Russell, which really, from seeing a beautiful higher high here and then this little reversal, has just fallen out of bed. It is now, if you saw my blog last week, let's see. You know, I always say I thought it was a good blog, but what am I going to say? It sucked. Let's see. No. So I wrote this in the middle. When did I write this? December 10th, Thursday. This is about a study I did this week regarding the Russell. So it's worth, do I think you have to trade on it? No, I think it's worth reading. It's investfortomorrowblog.com. Buy small caps the next 3 weeks. So to me, I'd look for a bottom in the Russell to form pretty quickly here, and then a pretty good rally into January in the Russell. If the Russell cannot rally into January, then I will eat crow and say I was absolutely wrong. The trend is very strong here for the Russell to rally. Does it have to be tomorrow? No, but the bottom should be in this week in the Russell. I'd be really concerned if the Russell could not muster any kind of strength in the year end. Qs, I mean, they still look dynamite. They've done nothing wrong. I wouldn't be surprised if they came down and breached the November low, 200-day moving average, and then reversed. They could reverse quicker, but they clearly have the strongest just chart pattern. And yes, I do see that there are 2 peaks up here, double top, possibly. Here's Europe, which I have not loved. I have not had a position in it. I kind of say the same thing. It's a wait and see to me. We thought in here the potential for some kind of head and shoulders bottom was forming, potential, which we've been waiting on, and now it's falling out of bed. So we have to wait with Europe. EEM, oops, not DEM. EEM really bad this week. And looks like it probably wants to go below 31 and then try to reverse. We shall see. 2 ETFs that I own in smaller size. I own FXI. Looks just like EEM. Looks like it wants to go lower, below 34 first, and then try to put it in the bottom. And I have a small position in EWH, Hong Kong. Looks a little bit stronger, but certainly not strong. Someone's going to ask me for Russia. Same thing. Russia did not have a good week. I signed up a new client this week who is Russian. And he was in, we had a very spirited conversation because he's extremely negative on the United States, thinks that there's no chance, no scenario whatsoever that the U.S. can restore itself to kind of world supremacy economically. And he believes because we have absolutely no manufacturing base. So therefore we produce nothing, we have to outsource, blah, blah, blah. And he thinks Russia is the next world economic power, which I argued, but he told me I didn't know what I was talking about. I would say that's not even remotely possible that Russia could be a world economic power. There's way too much corruption in their government, and there's no incentive to produce if you're an entrepreneur. So And then he had some notion that our whole oil boom in the Midwest, fracking and shale, was manufactured, which I don't believe, and that it cost them $100 a barrel to produce it, but they're producing it anyway, which I don't. That's not the intel I get. So it was an interesting conversation. We had a good argument about it. Okay, that's Russia. Let's see. Let me stop and look at a question before I go to sectors. Okay. Tiny said no new highs this year, struggled to even get green. My thoughts. Struggled to even get green? No, that I don't agree with. I think that we will close the year green. I think so. You know, if you want to know what will cause me to reconsider my longer term bullish forecast of Dow 20,000, certainly not a Dow down 300 points on a Friday. That does nothing for me. But if so, closing this year in the red will certainly make me do my homework again. And the amount of time if we're months from here and markets are not taking out the highs, I will reconsider for sure. But I'm not ready now. The market's done nothing to disavow what I think is going to be a bullish outcome. I mean, I guess again, if we sell off into the Fed meeting and we sell off in the rate hike news, that will be certainly coal in my stocking. If the Fed doesn't raise rates, that would really be a head scratcher. That would be. I got to give that a lot of thought. The market is not prepared for that. So, but I do think we'll close the year green. To Tiny's point, new highs this year. I certainly am not ruling it out. Like here's the S&P, and there's the Dow. It depends how much farther we bottom from here, but the Dow isn't. We still got what, 2.5 weeks left? Is that right? 2.5 weeks left. I wouldn't rule it out. No. So new highs would not be out of the question for me, Scott. And let's see. Let's see. Oops. News on junk. We'll talk about junk bonds in a minute. We'll get to that shortly. Okay, let me forge ahead into the 4 key sectors. Trannies really fell out of bed this week. A really ugly week in the trannies, and I'd said that eventually I thought they'd play catch up and take out these highs. So they're going to have a lot of work to do if they're going to start taking out highs. So this one we put on the serious watch list. They got to bottom very constructively, and out of the bottom, if they do bottom this week, they've got to take off to the upside. They got to be a leadership group. So right now, I'd rate this group a red. Let's do the SOX. SOX still have done nothing wrong. We got higher highs and we have higher lows. That's still very constructive. Can't argue with SOX leadership here. They've done nothing wrong. So I'd rate them still a green. Let's see the banks. This is interesting. This I find really interesting. Lots of red in the last couple of weeks, uncharacteristically so. Banks, another one. We're on that. Whenever the Fed does on Wednesday, I really want to see the banks start to lead. They have this gap to contend with, and the longer this gap goes without being filled, the more prominent the gap will be. So you look in the last couple of months, big gap here, got filled a week later. Little gap here, got filled a couple weeks later. Big gap here, got filled a week later. Big gap, little gap here, got filled a couple weeks later. So this gap in the banks didn't get filled until for months and led to a lot more downside. So very important that the banks, whatever the Fed does Wednesday, the banks become a leadership group. And XLY, the consumer, still has done nothing wrong. We still have higher highs and I guess kind of higher highs, higher lows. Looks like a stronger version of the market. We just made new highs last couple of months, so this still looks pretty good. So the four key sectors don't look awful. They're just not as strong as they were a couple of weeks ago. I'm certainly not ready to throw them out the window. Let's bang through the rest of the sectors. Software just made a new high a couple of weeks ago. Still a leadership group, done nothing wrong. Buy on weakness. Nothing wrong at all. Telecom. This was a head scratcher for me on Friday. Telecom got really bludgeoned. That is a huge decline in telecom because it's not exactly a volatile sector. So this you would think is based on the Fed raising rates, although in a really big down market, shouldn't have been. So I don't know the answer to this. This is a question mark for me. What the heck happened to telecom on Friday? Banks. Diversified financials, a little stronger than the banks for sure, but I guess I'd say they're a little better than neutral, mildly bullish. What else we got? Retailers got thumped again. I mean, they're just not acting well. Could this be a nice big bottom for a launch into leadership next year? It could be, but like a bunch of other sectors we've seen and will see, it has to bottom quickly. This can't go on sideways and sideways. These kind of powerful two lows here got to hold sooner than later. Home builders remain in that trading range. They're not doing anything wrong or right. They're just kind of hanging out. So almost in the last couple of months, we've gone essentially nowhere in the builders. So even though the Fed may raise rates, the builders are not taking it on the chin any worse than any other sector. Industrials just made a new high for the move a couple weeks ago, taking it on the chin a little bit, just took out the November low. I'd expect them to bottom early this week as well. Materials, this one is a little bit of a surprise. The material stocks have hung in really well the last couple of weeks. So this could be a leadership group coming out of this. I have just a tough time being bullish on material stocks, given that we are almost 7 years into the bull market, and they're typically an early bull market leader, not a late bull market leader. But they've traded really well since the October lows. Energy. So last Tuesday, energy put in a low, and we had a couple feeble day rally. Friday gave most of it back. Energy's in a spot where, like the other ones, if it's going to bottom, it's got to bottom right now, right down here. And the key was we talked about this little head and shoulders here was a nice spot that I ignored. And energy's got to bottom now, or else we're heading for a full test of the August lows. OIH is trading for the first time in a long time, is actually trading better than the XLE. So while it's still only a whisker away from last week's low, it's trading a little better than the XLE over the last couple of months. That too needs to bottom right away. Let's see, what did I miss? Healthcare. Healthcare and biotech have been trading great lately. Both, see here, you get healthcare hanging out right beneath the 200-day moving average. It's done nothing wrong. So you're in a really nice, tight trading range. It's coiling up for a move high, So if the market is firm, you should see healthcare emerge out of here much higher, much higher. and biotech, same, although a little bit weaker, because this decline was a lot bigger in biotech, but still hanging in okay. So another group, and maybe we need to get to January before we look at biotech again because of tax loss selling, but let's not forget it's trading very nicely in here. Defensive group, REITs. With rates potentially going higher, we talked about telecom at an awful Friday. REITs did not. REITs open and close at the same price, put in a little doji. They do not act poorly. They don't act good, but they don't act poorly. They're probably, pair of twos, dead neutral. XLP, certainly you can't argue with. Has a very nice structure on a chart. This one should be a leadership group. And finally, the Utes. Utes did not do poorly on Friday. Open and closed at the same price. I don't like them, but they didn't trade poorly. This just doesn't look like a sector that you really want to get involved with right here. Let's see. Internet, still my biggest holding. I'm going to give you dial it down to a narrowly chart. Very nice progression of lower highs and lower lows last week or so. I expect this one probably takes out November lows early this week, and then we'll attempt to reverse. Solar, just like crude oil and energy stocks, trying to hang in near the old lows. And gold. Gold stocks have done nothing. Zero, zilch, nada. All right, let me just pause and look at questions. Whoops. All right. Let's see. Can 25 basis point rate hike and another 75 basis points over the coming year really hurt junk bonds as badly as the market's punishing them now? I didn't forget high yield. Remember, I do it after sectors. Let's see. And I'll get to that one in a second. I just want to finish up the sectors. Dean, Morgan Stanley told me last week. Well, that's the first problem. Listening to Morgan Stanley. I'm only kidding. Told me last week they thought energy equities had strength compared to crude. That's true. The energy stocks have been stronger than crude. And that's historically very bullish. It just hasn't played out that way this year. Due to fund managers not wanting to be underweight that sector, which created short-term buying pressure. But the sector should resume downtrend. Do you agree? Not necessarily. So don't forget, you're in big tax loss selling season. I mean, this is when everyone throws out all their losers to write them off for taxes. The energy sector has got to be under huge pressure from tax loss selling. So for me, you have to believe that the selling will abate. They'll get an artificial lift from just lack of selling after soon. I mean, tax loss selling can go to the end of the year, but it's really soon that will, for the most part, will end up. I mean, most portfolio managers are putting their books to bed the latest December 23rd. The latest. So here are a couple things would surprise me. If energy can't get muster a rally into the first, second week of January, that would be a shocker on the equity side. And let's go on to high yield. Any other questions on the sectors before we go on? Okay. Oh, Lenore, I thought you were writing Jets like the New York Jets, because the Jets did it. The Cowboys sucked, and it's been a terrible year, and I hope they lose every other game. so we can get a great draft pick. But the Jets are playing great football. Here is the airline index, which continues to behave very, very well. Can't argue with it. It is a leadership group, and it's amazing. Look how strong Jets are, and look how weak IYT is. So that tells you how weak the rails and the truckers and the deliverers are. UPS fell right out of bed. FedEx fell right out of bed. Norfolk Southern had that deal. I forgot the deal. Where is it? A big. Oh, I forgot what day it was. I was here. Union Pack, awful. Not only is it a rail, but it's got an energy play as well. So, yes, Jets trade phenomenally well. Another leadership group. Jason, I'm going to get to crude right after I get to junk bonds, so hang on. And we will get to it. So let's go on to the AD line. Nothing here. It's in essentially the range of the lows and the old highs. So really there's nothing to speak of on the AD line. It's not going to help or hurt us. JNK, here you go. Absolutely obliterated this week. I don't know this for a fact, but I'm guessing this is one of the biggest declines ever in junk bonds without a commensurate decline in the stock market. Friday, so if you look at Friday's action in junk bonds and in the plain vanilla PIMCOs, just looking at the chart, I would tell you that it looks like you've got forced selling from a fund blowing up. And lo and behold, the news was Marty Whitman's Third Avenue fund they put up a gate and is not allowing shareholders to withdraw from the $750 million mutual fund. They're going to close the fund, and they can't get out of what they have. So this has been a long time concern for anybody who's invested in the markets, but certainly the regulators, is that when the bond market finally turned, there wasn't going to be sufficient liquidity. I've mentioned this for several months that I had a buddy who used to run high yield desks at a bunch of the big shops before he opened his own credit hedge fund. And every time I went long this year, he laughed at me, and I kept laughing at him when I made a few bucks, and then I'd lose, and he'd say, "I told you so." And I told you guys the last couple of weeks, he said to me, there's no shot he'd buy high yield this year. It does not look good, and now you can see why. He was right, and I was dead wrong. I mean, I didn't think high yield was going to rally. I just every juncture, like down here and in here, I thought we had a sniff of a rally coming. He said to me, "Sell into the rally." It's not real. Well, so now we're getting to a point where high yield, what a huge decline. In the stocks, in the ETFs and the plain vanilla. Let's see. Actually, scratch that. Let me go here. There's a great indicator. I guarantee you all this high yield sentiment surveys will be awful. So here we go. Right here, folks. If I were like a big marketing guy, I'd say, here's a 5-star tip. Okay, the ETF is at 33.69 on JNK. The underlying is worth 33.90. So a roughly 60 basis points discount to fair value. That's very unusual, and that normally happens as high yield is bottoming, is that it trades at a big discount. The discount can get bigger, and I won't be surprised if it does get bigger early this week. But that is a typical sign of high yield bottoming, when the ETF trades at a discount to fair value. So let's see if I answered your question on high yield. Let me just scroll back up. The news on junk bonds, the hedge fund liquidating. Scott, it wasn't a hedge fund, it was a mutual fund. Let's see. Can a 25 basis point rate hike? So to Jay's question is, the Fed's going to raise quarter point this week, and I think they're going to raise 100 basis points next year, which gets us to like 125 to 138 on the short-term Fed funds rate. Is that going to really hurt junk bonds? No, that's not going to hurt junk bonds. But energy and metals and mining are hurting junk bonds. Fed raising rates 1%, I don't think is even relevant to junk bonds. Crude oil collapsing is very bad for junk bonds, as we've discussed for months, because there's all this refi stuff coming up. To me, and I'll put it in my forecast, my fearless forecast for 2016. I certainly think you got a high-profile bankruptcy coming. I'm sorry, a high-profile default or two coming in high yield. So you could even have a really high-profile bankruptcy. And I don't mean like Exxon or a Chevron or a Schlumberger, no. Okay, let's see. All right, Jason, I'll get to crude in a second. May, I spent a lot of time on my forecast for the week, but I'll summarize and say this. I thought whatever trend is in place going into the Fed meeting will be reversed. So if we continue to sell off, which I think we will have a bottom in place by end of day on Wednesday. I think we rally from there into year end. Okay, does the weakness in junk bonds reflect a weak underlying economy, John? No, but what it does say is overall weakness in junk bonds tells you that certainly you've got less liquidity in the markets because liquidity flows. Junk bonds will see, because it's a very illiquid instrument, they will respond to lack of liquidity a lot quicker than, let's say, an IBM or a Microsoft. So that's a comment about liquidity. But it does not reflect a weak economy. No. Were corporate stock buybacks funded with junk bonds? Peter. Corporate buybacks were funded many ways. I have not seen them funded by junk bonds. Doesn't mean they weren't, but I haven't seen it. Because most of the buybacks, Peter, have been in the more blue chip names that are investment grade. And the problem with junk bonds is you got the oil companies in the middle of the country loaded up sold junk bonds. And now, because oil collapsed, they can't meet their interest payments. Problem number one. Problem number two is that you got hundreds of billions of dollars that have to refi. So let's say they floated bonds previously at 6%, and now to get the same money back, they got to float bonds at 10%. Well, with oil where it is, they can't afford to have a 40% increase. No. A 60% increase, 66% increase in their debt service. They had a problem. Certainly, I don't want to call it a crisis, but there certainly is a kind of a big boom event on the horizon in junk bonds. They're not just going to repair themselves organically. There's going to be some kind of event, in my opinion. Okay, let's forge ahead. Let's go to the dollar. So I said this last week. After this big down day, I said that I think the dollar is basically dead money for a couple of weeks to a couple of months. I don't think it's taking out these highs anytime soon again, but I think they will take them out next year. And that's going to be my opinion almost every week now. We're going to consolidate for a while after this big down day from a new high. But I don't think the bull market's over in the dollar by any means. And here's the euro, which is benefiting from this. Would I buy the euro up here? No, I wouldn't. I would actually get ready to, if I were longer term negative, which I am, I look to short the euro again. And the same thing with the yen. having a really nice run in the end of the upside, and I think we're getting close to that spot where you go short the yen again. Short the yen, let it fall, cover, let it rally, short the yen again. I think you just can do this trade. Shorting the yen and the euro into 2017-18, I think, continues to be the plays. Okay, we did the yen, we did the euro, we did the dollar, we did bonds. Right here is TLT, which I would say I did get lucky buying TLT a week ago. It wasn't because I thought it was going to go up myself personally. It was one of my quantitative systems. Sometimes remember when I got thumped earlier this year. Boy, they were wrong. I bought strength and I sold weakness 3 times. I think in February and early March. That hurt. Thankfully, this week was a good week for me here. So mitigated some of the downside that I felt. Crude oil. Here we go. Oops. If you go back, you've seen some of the most relentless selling waves. There's a selling wave here and a selling wave here. These are relentless selling waves. If you just showed me the chart, and I didn't know it was crude or any of the fundamental backdrop, I'd say it looks like you've got a blow up in place, and then you've got some forced liquidation going on. And my guess is, I haven't looked at this in a long time. Let's go back to the. Let's take a look at the weekly chart first. So here's a monthly chart. It's taking a long time to load my data. I don't know why. There we go. Here's a monthly chart of crude. I think it was here, which one of the many times that I said, oh, crude could be bottoming, and I was wrong at 48. So what's happening now? Here's what I don't believe. I don't believe that retesting a low from 2009 is, if you look at Edwards and McGee's book, which is the Bible on technical analysis, too much time has elapsed to make this relevant to here. So you can't say it's retesting the 2009 low. You can certainly say that it's going to go, it may go below 2009 low, but it's not an accurate retest. Too far, it's too long ago. But just based on the chart, you'd say that momentum still favors the downside in crude until it reverses. Whenever it does reverse, it's going to be sharp and very quick to trap as many bears as they can. But certain momentum favors more downside in crude. Doesn't have to be this week, but this is ugly. It looks like some kind of capitulation is in place, some kind of a final wave down. Maybe from there, something we haven't seen in a long time. Maybe crude stays in a, I don't know, 50% range for years. Wouldn't that be interesting? We're so used to these ginormous moves like this. But maybe it goes back to something like this. 91 to 99, 98. Crude stayed in a big range, but it really just went sideways on balance. Maybe that happens. I don't know. We'll have to see it. We'll take it as it comes. So I hope I answered that question regarding crude. Let's see. Mike, I heard once strengthening dollar means global liquidity is tightening. Do you agree generally, and what does that mean? So to continue to pick on Pomposani, in deflation, in a more deflationary environment, meaning that generally prices go down than up, I agree with that statement, Mike. But in an inflationary environment like we previously saw, the strengthening dollar is good. I don't think you can attach a rule to a higher or lower dollar meaning something definite. Here's the dollar on a monthly chart. Okay, so you look at it on a daily chart and you go, wow. Let's look at a weekly chart. Wow, look how strong the dollar is. Holy jeez, this is terrible for liquidity. Oh my gosh. Nice cup and handle here. All right, and then you go down to a monthly and you go, wow, the dollar was basing from 05 to 14, 15, almost 10-year base, and now it's finally coming out of the base. Looks like it's certainly going to head much higher. Well, back in the mid-'80s, I think the dollar was like 160. So 85, yeah, it was 160. It was a whole lot higher, and then it fell apart. Blah blah blah. So right now you have a whiff of deflation globally, just not in this country. You certainly have no inflation. So I would say that a dollar, the strength in the dollar certainly supports the case that global liquidity is declining. And as I've said, my thesis that the Dow goes to 20,000 is based on the dollar getting much, much stronger, and you have foreign capital flooding our markets with money, and that eventually leads to a 1987 style decline when it gets so bad you have wicked currency imbalances around the world, and then you have some kind of crisis. And that crisis would be in 2017 or 18. But we are way away. Oh, my foot is killing. Oh my God. I feel like I have the elephant man's ankle. Although it hasn't turned black and blue yet. So that's how I see it shaking out. Let's see, one sec. I'm going to scroll Mike. Michelle, who's a Ramer? A Ramer? Hey, hold on, Michelle. A Ramer said to sell. I told her she would wait until Wednesday to see if I told her to stop listening to. Oh, you mean Kramer, I think. I think it was a typo. Kramer said, what did Kramer say to sell? The last time I saw him on TV, he was telling everybody how bullish he was. Yeah, Kramer. I think it's really hard to listen to him. I mean, my grandmother, I think, spent a year or 2 years trading every pick he gave, because for years she told me how smart he was. And then she bought every stock he said to buy, and she lost a lot of money, and that was the end of Jim Cramer from at least my grandmother's standpoint. Okay. Do you ever use insider trading as basis for your trading, such as huge buys? So insider trading in like energy companies, insiders are usually early on the buy side. They're usually early. They're usually not wrong, although without doing my homework, I would say in the last 8 years, insider buying has not been a really highly accurate indicator, and I don't know why. Oh, Kramer said to sell on Friday? Oh my God. Well, I guess if we collapse from here, he'll be right, but he was just telling everyone how bullish he was. They should go out and buy. I don't know. Any help for MLPs? Well, here's the only one that I own, Jay, and I still own it because it's a 5% holding in a portfolio. It's a buy to die, so I'm hopefully never going to sell it. That's I mean, yeah, there'll be a bounce. MLPs will have a big bounce. The question is, can they put in some kind of constructive longer-term bottom? And even if they go sideways for a period of years, you still collect. It must be, what's the dividend now, 5%? You got a 9%, 9%, wow, 9% dividend now. Holy jeez. Well, obviously that says the dividends are going to get cut because there's no shot they're going to continue to pay. Okay, let's forge ahead. Copper. We've talked about this for all year. Insider trading, copper, the insiders have been long copper all year. And now they're the longest they've ever been. Ever, ever, ever. Copper looks constructive to me, but I'd like to see some bottoming action, but copper certainly looks constructive once again. Remember we talked about playing it here. We were talking about buying it here. We had two good buy days in a row and a divergence. Then we had a nice little rally that petered out, secondary peak, and then they collapsed again. Copper is time to give it a shot again. Gold. You have to lean to the long side on gold. It looks okay. This is also a very seasonally positive time for gold. The bulls just haven't come out in force yet. But you have to certainly lean to the long side on gold. Gold. Oh, Natty Gas. Thank you. Natty Gas. Another one. The insiders and the smart money has been locked and loaded long forever in natural gas. And we thought we had something here, and it looks like it's petering out. This is obviously a very key week in Natty Gas. Very, very, very key week in Natty Gas. We talked about this bullish engulfing last week, and you've got the makings of the beginning of an us bottoming process in wheat. I like this pattern. Certainly lean higher in wheat. I think wheat looked the best of the three big grain commodities. Corn, yep. I don't really have an opinion on corn. It looks like a similarly bottoming, but I don't love any of the action in here, so I'll say neutral on corn. Beans, same thing. After this kind of action, you have to step away if you're long. And if you were looking to get short, you'd short some kind of move back into the middle of this day. But they look like they're trying to put in, multi-month. Maybe they become year-long bottoming patterns. Sugar, which I've mentioned many, many times, a lot of smart money selling in sugar. So we talked about getting short after this candle and after this one. I think sugar, you short it, you get stopped out, you wait, look for a reversal again, and keep getting short. Eventually, I think sugar probably comes back down towards 10 or 11. Cotton, nothing. I have no opinion on cotton right now. Cocoa, same, no real opinion. Going nowhere in a hurry. And finally, coffee. One day, coffee's going to put in a bottom. So this is very good behavior if you're looking for a long-term low, but very frustrating if you're waiting to trade it. So I don't think we're there yet. Just going to be patient if you like coffee. Oops. And I think that is all. Any other questions, comments, concerns? Go ice my foot. Just took a shower. My head itches. It's the most bizarre thing. I keep thinking it's like some kind of allergy thing. And I keep running to my wife every day and say, oh my God, I think the kids gave me lice. Check my head. We were on the softball field yesterday practicing, and there were swarms of bugs flying around, like in the middle of December. How does that happen? Rick asked, is Freeport, Freeport certainly is a copper play, Rick. And they just cut their dividend, which is one thing I do love to see. It makes sentiment incredibly negative. So copper, Freeport is a way to play copper, yes. can you repeat what you said about Wednesday meeting? Yeah, these guys at the Fed. Actually, there's a bunch of women in the Fed now. You got Loretta Mester and Lel Brainerd and the woman who heads the Fed, whatever her name is. You got a bunch. It's kind of good. Well, it's not kind of good. It is very good. As we know, women make better investors than men. That's been proven. So about the meeting, yeah, I think that the market, if a lot of the trends hold true, the market's going to bottom between tomorrow and Wednesday, and then begin the Santa Claus rally into year end. That's what's supposed to happen. That's how I'm going to play it. John, you asked about your buying weakness. John, I'm not waiting for the Fed. As I think a lot of you guys know, I like to be early. I do better being early and kind of sucking it up than being late and having to buy on the fly. So I will likely be fully positioned long before the Fed types up the press release. What did I sell this week? I sold, I got my mid caps. What the heck did I do? I sold my REITs, IYR, and I sold something else. I can't remember what it was. Oh, that's amazing. I sold something else too. Whatever cash I have, I plan on deploying long before 2 o'clock on Wednesday. Anybody else? Last call. Going uno, dos, tres. Okay. Thank you all for coming. At least we got some volatility again. You know, it's been a fun, whatever it is, 5 months. Oops, I'm just texting Tiny that I'm done. So at least we're getting some things to talk about. Not that boring creeper market. So everybody have a great week, and God willing, we'll be back next Sunday. Goodbye.